Hello, everyone, and welcome to Vectoscaler Tech Talk Show. Vectoscaler Tech Talk Show has been running for more than 50 episodes. It's been more than 1 year that we have been conducting this program on a weekly basis. And for today's Tech Talk as well, we have an amazing guest, Vikas Aggarwal ji, who is going to cover the insights about unlocking the secrets of startup investing. Welcome, Vikas ji, to our show.
Thank you, Vikas ji. So Vikas conflict करेगा. The VJ and VA may help possibly.
yes, VA might help, but as I'll be asking, so people will be clear किसकी बात चल रही है. Let's see how the flow is. And for the benefit of our audience, let me give you a brief introduction about Mr. Vikas Aggarwal. Vikas Aggarwal is having a vast industry experience in the internet and e-commerce space. किसने इंडिया मार्ट का नाम ही सुना होगा? So he has worked with IndiaMart.com, India's largest B2B marketplace, for more than 22 years across multiple capacities, leading up to a successful IPO. His last stint was with as a national sales head, managing 3,500 people across 200 plus locations. Just imagine the numbers and you will understand the dynamics. Have taken leap of faith in January 2022 for making tech-enabled community to enable investor meet startups and help business generate via community connection. In a new role, working not just as a co-founder in V Founder Circle, helping create the ecosystem, but has himself been an avid angel investor with 55 plus investment till date. So when there is a question about startup investment, you know the right person now. Now holds additional responsibility of co-founder of invest.com, tech platform for startup investment, partner in Avinya Ventures AIF Fund, co-founder in EvolveX Accelerator. Have done his BTech from Nagpur University, backed by MBA from IIT Delhi and executive MBA from INSEAD. That's just the summary of the profile. Vikashji, you have done a lot. So can you let our viewers know about your quick journey and how you got into startup investing specifically?
So VJ, I think right from very beginning, when you talk about my education and all that, my family is typically a business background. We are my grandfather, father, they have been all in property business. And I remember in 8th class or sometime my father asked कि चलो आओ दुकान पे बैठ जाओ and just look after होता है ना शाम को बैठ गए. That's how we are typical बनिया community, दुकान चलानी है. And I think that was my first fight with my father. भाई मेरे से ये काम नहीं हो सकता. That's not what I am made for. So he said, okay,
Okay.
then go on and study. That's the only thing you can do. Either you get into shop and so that those education all the way joining India Mart, and India Mart was not India Mart. There were 20 employees. Nobody knew. It looks very great when you look at the hindsight. Nobody knew. It was a very small, I would say, house in Madhuvia, a small market, hardly space. Most of the time in June, July, there was no light, and we used to make nimbu pani and drinking. So that's how the life has been. But after those long 22 years and a phenomenal journey, the question was, and I would say thanks to IPO, there has been a fair exit. At my level, somebody can live in comfort, and then you debate on your life ki karna kya hai. So I
Yeah.
think that the one keyword was entrepreneurship. Second, because you have been in a single domain, it was itself a challenge to figure out what to do next. So somehow went across multiple people, connected to a lot of steam, including one of my cousin have a iron aluminium factory. चलो factory खोलते हैं. So you don't know, and that's where the startup bug bite. Since everybody is doing, can we create the ecosystem? Within that, I met a lot of platforms. I would say at that time it's a story almost 3 years back. Somehow the story at We Found a Circle clicked. So here I am. Both the journeys, I would say, one as a owner and co-founder creating the ecosystem, and second looking at my own investments in startup space to enable the founder. So I'm living two lives, I would say, parallelly, enjoying both.
Yeah, and definitely you have a wisdom in that space, and that we can see from your profile that how you started is having a strong connection with a company which started from a small company going to the level of IPO, and now everybody knows India Mart. And then using your experience, probably your parental experience also of the word investing, that how things can add different dynamics to the whole ecosystem. But because whenever we get to hear about the news about startup getting funding, but can we still add more details? So what is actually startup investing? Because people just hear that, okay, few millions are being invested into a startup, but how is the whole ecosystem? What is startup investing?
So Vijay, the knowledge that people have is extreme side. Either they know about the Shark Tank, everybody's pitching, everybody's getting money, you get some equity, and that's a cup of cake that you get. Or you hear extreme of Byju's that somebody has siphoned off so much money and the business is winding off. I would say
True,
both
true.
extremes are very very wrong when you see from a neutral perspective, because
Yeah.
individuals consume what they get. They don't know the inside story. If I just say a top line, 99% startups fail because that's why they are startups. नहीं तो एज आई कीप सीइंग परचून की दुकान खोलो 10% ग्रोथ और 15% मुनाफा तो वहां होगा ही होगा. मतलब दैट्स अ बिजनेस दैट पीपल हैव बीन डूइंग फॉर एजेस. When you
Yeah.
say startup, obviously it's high risk and high reward as an investor. It's much high risk for that individual who is putting his own time and life at stake for something which has not been done. So yes, worldwide the failure rate is 95 to 98%. That's where platform like We Founder Circle and there are multiple other platform who does, I would say, some additional due diligence. They just try
Okay.
to filter the wheat out of chaff to reduce that failure rate from 99% to 80%. So we none of our plan boost more than 20% success even after those due diligence. And
Okay.
that's how this world is and this world will be. We just reflect on parallel businesses, I still see in my local market at least 10 businesses or 10 shops change every year from X business to Y
Yeah.
business. When I look at them, not as a startup but as a SME business, I think equal challenges in market. Even when
Okay.
you are doing a conventional business, even when you are opening a garment cloth or you are opening a food joint or you are opening a normal mobile store, equal challenges. So yes, platforms enable increasing the success rate from 1% to possibly 15-20%. But that's the best case, and that's the whole journey about high risk and high reward.
Okay, high risk and high reward. So, talking about the other kind of investment, because if there is a person who is having good lot of money, the other kind of investment they might be looking forward to is real estate, gold, or probably the stock. Now, in your experience, like how is startup investing better than them, and if yes, why?
So no, I would not say it's better or worse. So let's first understand there are only 5 or 6 asset class worldwide where people invest: property, gold, and these two have been running for years for a simple reason: cash.
Yeah.
जिसके पास ज्यादा पैसा है कैश का यही दो जगह लगा सकता है. So the two reasons is either cash or I would say lack of knowledge. If
Hmm.
I take my own journey, I only got to know about mutual fund possibly 10, 12 years back. I never knew. In fact, my father never told me. My all early investment have been in properties. But so
Okay.
typical 6 asset class: property, gold, listed, which is equity mutual fund PMS, unlisted, which is a startup space. Then you can say fixed asset, which is FD and PPF, and crypto. Worldwide, these are the only asset where you can invest.
Yeah.
The answer is not which one is better or worse. The answer is diversification. I
Okay.
invest 60-65% in possibly equity mutual fund. That's my cup of tea. 15% property, 10% gold, and 10% startup. It's not that I'm running a startup company. I've sold my house and investing only in startup. No, that's not the way. So my first keyword is diversification. Second keyword is return, CAGR, compounded annual returns that you are getting.
Okay.
If you see Vijay, last 30 years, gold has given 8% return. Property has given 7% return. Within listed mutual fund, have given 11% return, and I'm talking 25-30 years in India.
Yeah.
Startup, both angel investment and VC fund are very new, and you look at upward of 24-25% return. And that's where you take that risk and you invest. So it's purely my keywords are diversification and the returns that you are getting. It is nothing to do with emotion more so when it's on your own money which is at stake. So yes,
True.
it's
True.
not that it is good or bad. I would say you need to diversify for multiple reasons, including offsetting or hedging your risk. And yes, high
Okay. I think,
returns.
yeah, and I think that's the right keyword from this conversation is the diversification. It's not which one is better. Probably the better word is diversification, that one should diversify it into new
I
markets.
would just say that the best one which you believe as an individual. So for
Okay.
some it can be property, for some it can be gold, for some it can be listed. cannot be more than 65% as a normal human behavior of diversification.
Okay.
उससे ज़्यादा तो you are putting too many eggs in a basket. The same story that we heard possibly when we were in class fourth or fifth. Just that
Yes.
people don't don't follow that.
True. True.
I know
True.
I know thousands of people. I keep meeting mostly entrepreneurs. All of their money is in their business or factory or entrepreneurship. They don't have personal wealth. They don't diversify. The only investment they have is their own business. So I think
Okay.
for me, diversification is more to do with hedging your risk, distribute your returns, and obviously कहीं पे 8 आएगा कहीं पे 18 आएगा. That's how you earn, and then you make up money at the end of the year.
Okay, okay, got that. Risk is the first word, as you also mentioned that it is more about that high risk, high gain, and risk is the first word that comes to the mind. So, if there is such a high risk, who should and when should they got into this startup investing?
So Vijay, when I say high risk, I also use the keyword diversification. Why
Yes.
high risk? Because success rate is only 20%. Anybody saying more than that may be genius. That's not what happens. But then I keep saying, like you invest as a SIP in mutual fund. If you do a SIP in startups, कि हर क्वार्टर में एक स्टार्टअप में लगाऊंगा 2-3 लाख रुपए लगाऊंगा, and you keep doing 5, 6, 7 years, you create a portfolio, and that's where rewards come. The
Okay.
risk comes when you invest in one or two company. The risk comes when you invest in मेरे वो चाचा के भाई के बेटे की है तो मैंने लगा दिया, and so on so forth, which is a friend family round. That's why it is highly risky. If I take my own experience of investing in property, despite my family being in that business, my 15 years CAGR return was only 3%. Because most of us end up calculating in absolute terms. 50 lakh का लिया था 80 lakh होगा, something like that. Uh, while we
Yeah,
study
that's
simple and compound interest again 30 years back, we actually don't calculate it that way. So
true.
nobody is worried when their property gives a 2, 3, 4% return, but they are worried when startup doesn't give 24 and give only 14. So the definition of risk is very relative; it's not absolute. And I would say the
Okay.
only single solution is diversify. The other way to diversify within startup investment is VC fund. VC fund is like a mutual fund where a fund manager invests on your behalf, and he has a very broad thesis. He does not put more than 10% money in a single startup. He invests at least in 15 company. So he diversifies on your behalf. But end of the day, in both the ways, be it as an angel investor, investing in individual startups, or as a VC fund, where you are giving money to a fund manager who invests in your behalf, that hedges your risk and increases your reward till
Okay.
the time you take your own bets, and that can apply even in listed equity. It has happened to multiple shares from Paytm to a Nika to a LIC. There can be from even Adani, Hindenburg report and all that. So there can be ups and downs if you don't diversify. Same
Okay.
case here. I would say my risk word is actually antithesis of diversification. As
Got
simple,
it. Got
and
that.
that
Got
applies
that.
in any asset class.
Okay. So diversification and also the strategy, probably the understanding the market and then taking the calculated step that how we can
I would
minimize our
not say
risk.
understanding the market. Nobody can time the market, never ever.
Yeah.
I would say
Yes.
distributed.
Okay.
आप ऐसे
Distributed.
भी कितना लगाओ, स्टार्टअप में भी लगाओ. You want to invest 2-3 lakh rupees, but do that every quarter for 20 quarters.
Okay.
So the risk will automatically distribute across time.
Okay. Okay. And what are the actually there might be some of the audience who may not know the different stages of startup investing. So would you like to share what are the one, two or three broader what are the different stages of startup investments?
So very broad stages. One is ideation oblique pre-revenue, where things are on paper. You are still trying the product market fit, if it will work or not. You're still looking at market. Second is between revenue to, let's say, Series A. I would say Series A, when from zero you have reached a valuation of, let's say, 100 crore. There are no benchmarks right now. All these jargons of a seed and pre-seed and pre-series and Series A are too confusing now, because people the valuations are very very rigid. But just pre-revenue or product market fitment, post-revenue, leading all the way to IPO, very broad stages, if I would say. Within that, yes, people raise fund as early as $1 or $2 million, which is 10, 20 crore, all the way to 100 and 1,000 crore. We have a startup Zip. We invested in 20 crore. That's a seed round, and now we are investing at 2,600 crore within 4 years. So multiple stages of a company, how good they do.
Okay, okay. I hope that answered my question. I have one question, so let me quickly pick it up. So, and it is from Nikhil Aggarwal. Would you like to share your latest investment in this financial year and how they are performing?
So hi Nikhil. So first of all, I generally put all my investments on my LinkedIn. You can see date by date. By the way, just if you want to refer, that just for reference. I am nobody to pitch any startup. I'm just putting that disclaimer. I'm not here to pitch any startup, but those are the investments I do. When you look at how they are performing, to be fair, in a startup, I don't even look at the performance for next 2 years. सिर्फ दिल धक धक होता रहेगा, हार्ट बीट बढ़ती जाएगी, हर महीने क्वार्टर वो रिपोर्ट देंगे, आप लगे रहोगे, निकलेगा कुछ नहीं. एंड बाय द वे आई डू दैट इवन फॉर माय म्यूचुअल फंड्स. These are long term investments. Unless your horizon of minimum 3 years and 5 to 7 years, you're not going to get anything. This is not I would say equity investment जहाँ रोज गूगल पे जाके चार्ट देखते रहो and you keep and neither you are here for intraday trading. These are long term bets. Please understand, startup investment is like property market. You can purchase right now, you cannot sell. It takes its own time. Even if the money increases, it will take its own time to sell. Please don't understand anything less than 3 years. I would say generally 5 years. So asking how are they performing? To be fair, इस साल की मैंने performance report देखी भी नहीं किसी की खोल के, even if they have come. I don't see that before 18 months, to be fair. After 18 months, even if it is a good or bad news, it generally comes automatically to you.
Okay.
And at 65 investments, Vijay, it is very difficult to review each of them even on a weekly basis, for that matter.
Yeah. So thanks for answering that question, and thanks Nikhil for asking that question. My follow-up question is coming from, like, when we are talking about different stages of startups, what are the common mistakes? Because you have been reviewing the entrepreneurs, that how they are pitching for the investment. In your experience, what are the common mistakes made by entrepreneurs, or some of the best practices that you want to suggest to entrepreneurs that can increase their chances of funding?
So Vijay, we keep seeing a lot of presentations in Excel.
Yeah.
The first thing I always see everybody presents, I am on the right top axis of X and Y. I am where nobody is. My competitor have not done this, I am doing that. Let's also understand why your competitor has not done it. Why is that you are jumping the gun, you are finding that blue ocean? And I really get worried when anybody shows themselves extreme of those excesses. For me, it's a clear red flag. Secondly, I generally see people, a common term is how much is the market available, what is the addressable market TAM. And people talk about the addressable market is 5 billion and I'm only looking at 5% of that. I'm coming from India Mart. Just to give a reference point, India Mart caters to GST suppliers broadly, because
Yes.
that's a formal economy. At 80 lakh GST suppliers, which is again a public data, India Mart has close to 2 lakh paid suppliers. Okay, which is typically 2.5% market after 25 years of existence. So when startup says मैं तो 5 से 10% ही करना चाहता हूँ, market 15 billion की है and all that, it worries me. Have they really understood the market and how much they will be able to do? So for me, these are two red flags to begin with. In general, I would say every single team, be it as a co-founder, be it as an employee, and more so when the founders are very product fanatic. I have 2 companies in my portfolio, very beautiful product, everything is fine, except they are not able to sell it. They don't have any sales guy, or they don't have any sales background. Very beautiful product that they're creating, or I can put a second round of investment, but dhanda to ho. So I think that team building of a sales guy and a marketing oblique CEO or whatever, and a finance, that's a minimum you require. Obviously, you can't hire a CFO day one, you can't hire a CEO day one, but that's a combination. Specifically when it's a product based company, which because we keep investing in a lot of tech companies where product is the key many times. Half the time it is enabler, half the time it is the product. So that's another thing that's very, very important, and we see a lot of startups failing on that. We can keep talking. It's a very long tail, but I am just telling you top 3 possibly which are red flag for me.
Sure. Thanks for answering that question. And to your answer, we have got a commendation from Nikhil that VA, thanks for your valuable insights and thanks for thought on startup investing. I have
By
a
the way, I'll
follow-up
be
question.
available offline if Vijay is ready to share my number. I can talk to anybody anytime. So that's
Definitely, we will share your LinkedIn profile, which is having your number, so that people can reach out to you and get answers of that question.
so.
So, yeah, right now you talked about product company. I see there are some service-based companies who are also looking for investing, but they have some queries and they have some hardship. So, what's your experience? Is it easier for service companies also to get funding, and how's the dynamics?
Yeah. So we ourselves are very agnostic to industry and to product or service. Just that
Okay.
I answered that question specific to product industry, but we are very agnostic and invested heavily on a lot of companies. So I don't think money is a problem. The problem is a right idea and the right founder. When we
Okay.
invest in early stage, our 60% weightage is on founder, 20% on that idea, and 20% if that idea has sufficient market. These are the broad three metrics that we see. पीपल अज्यूम कि बहुत सा एनालिटिक्स देखते हैं, ये देखते हैं, बॉस अर्ली स्टेज में तो रेवेन्यू ही नहीं होता, एनालिटिक्स क्या करोगे आप? So till the time a company has at least 3 years of execution, some time of revenue, it reaches some close to pre-series A or A, तब आप actually Excel देख सकते हो. At very early stage where we invest, it is not. So primarily 60% of what we look at is founder, 20% idea, and rest 20% is the idea big enough for market to be created and give a 100x multiplier to our investment. These are three things we look at.
Yeah, that's a beautiful insight. 60% founder, 20% product and idea, the ideation primarily, and then 20% the other things,
On
the finance
execution,
and
yeah.
other thing. Yeah, on the execution side. We have another question coming from Dwadashis, who is asking, what is the minimum value amount with which one can start their journey of investing in a startup?
The minimum amount is 2 or 3 lakh. Lot of platform, depending on the size, allows as small as that. You can take 2 lakh as a benchmark for that. But
Okay.
I want to very clearly clarify that that's the biggest uh, wrong assumption where people start. As I mentioned, you need to spend next maybe 15-20 quarters for investment, maybe one investment per quarter, unless you reach a number of 18 to 20 investments. If you are here to invest 2 or 3 startup, my bland answer will be please don't invest. This is not a gamble that you are playing that with your hard-earned money. Please don't play that. It is pure gamble that you might be playing by investing in one or two. Yes, there can be people who can be lucky in two and they can say that everything is hunky dory. 99.9% will not. So unless you plan that in a very structured manner, at least 18 to 20 investments, which can happen across maybe 3 years, 4 years. That's okay. There's no rush out there, depending on how much money you have. So minimum amount for me is 40 to 50 lakh. 2 lakh is a very wrong number to put in perspective. If you don't want to do that much, which is okay, please don't invest at all.
Okay.
Yeah.
So though, as you just mentioned, that though investment can happen or start with 2 lakh, but that's not a good go-to market strategy. The market strategy should be when at least someone is planning that how they can manage 18 to 20 investment. So whatever is the amount, the minimum
So
amount, but
PJ,
18, 20
if you
investment.
relate that to mutual fund,
Yeah.
the person who does any gain in mutual fund is the one who is a long-term investor. Even if he's investing, let's say, 1,000 rupee fund, 5,000, 10,000, month on month, because you
Yes.
are earning because certain shares are increasing because India is going. It's a journey, I would say. The
Yes.
journey doesn't change when you jump startup as an asset class. Journey is similar. It's a patient capital. You need to take your time to invest because all the startup will not come to you in a single month. You will keep getting month on month, and then you need to have a patience of 3 to 5 years to also get returns. People are so engrossed with equity and म्यूचुअल फंड, आज इन्वेस्ट किया परसों स्टॉक देखेंगे, इंट्राडे ट्रेडिंग करेंगे, एग्जिट लेंगे. ऐसा कुछ नहीं होगा स्टार्टअप में. I can give you 3 standard tips. Invest when you have excess. When I say excess, both ways, neither will you be able to use this money elsewhere and it can go zero. Second, even if it becomes 10x, it is not liquid. You cannot simply go and say कल पैसे चाहिए नहीं मिलेंगे. And third is diversify. Please always remember these 3 tips I'm giving. इसके बिना इन्वेस्टमेंट मत करिएगा.
I think those are very powerful. First, invest when you have the excess amount. Two, it is not going to
Yeah,
liquidate
it
easily,
should
even
not
if it
come
grows.
from your kids' studies or marriage or something.
Yeah,
Yep.
yeah, and then
Second is,
diversify.
even if it is multiply, it is not exitable. You can't do
Yeah.
anything. And third is diversify.
Good, good. Thanks, VA, for answering that question, and thanks, Dwadashi, for asking that question. I have another question which is coming from Shubham Gupta. What advice would you give to someone new to startup investing? So probably we have been talking about that advice to new ones, but still probably how they can develop the knowledge. Because if is it that one has to get into the water to understand the dynamics, or there are ways of doing something
So,
differently?
Shubham, one of the ways is, let's say, I run a company called We Founder Circle. We keep doing pitches every month where the founder comes and presents their pitches, and everything is free of cost till the time you actually plan to invest. So, my first step will be attend a few pitches, hear out a few founders, which will be from different industry. What happens in those pitches also, like you are asking questions, there are a lot of potential investors who ask questions. So you get a very wide view of a single company कि अच्छा ये तो मैं देखा नहीं था, ये तो पूछना था, मुझे आइडिया नहीं था. You will learn from the community itself. तो my recommendation is 3-4 pitch में आओ, 3-4 महीने लगाओ, 10 script सुनो, take your own time, breathe easy, hear what people have to ask for that industry. Then you will be much comfortable where you are right now. Since all of this is free of cost, there is no membership charges, there is no registration fee. Just do that. Once you become comfortable, even if it takes 6 months, that's where you should actually take the leap.
While we are discussing, would you like to share how does V Founder Circle operate, and how people can understand or interact with V Founder Circle? What are the services?
Okay. So We Founder Circle is a community-based investment platform. We have close to 15,000 potential investors who look at various opportunities being provided. These 15,000 people are from 65 countries, 700 cities. We keep building that community. We travel to a lot of cities to do that. We present 3 to 5 pitches every month. Once you become member, which is again free of cost, you keep getting those intimation on mail and WhatsApp when the pitch is. By the way, our next pitch is tomorrow 6 p.m. just in case anybody wants to join. All the pitch details, the founder comes in, he presents his own company, then people ask a lot of questions, and then they put their intent. All the details are available on our tech platform called invest.com. That's invest.com. And that's where you get all the details. So a registration, attending a pitch, getting to know more questions about that, and then if you're interested, giving your intent. That's a simple process. All these investments are very, very highly SEBI regulated. There's a lot of framework, there's a lot of compliance that SEBI has put in. So yes, as a fund, that's what we keep doing to enable our enable the investors. So that's how you can join in. Simply register and invest, and you will start getting details. As I mentioned, till the time you plan to do investment, everything is free of cost.
Good, good. I think one should first develop that knowledge. Knowledge is the precursor for each and everything. One should develop that knowledge, attend such sessions, and then they can make the conscious choices what they want to do ahead. And I think kudos to
I
you and
keep,
your team for starting such a community.
no, that's what our whole goal is, to democratize the ecosystem. We don't want to limit that to Bombay and Bangalore and Delhi. 80% of our investors and 80% of our founders are from tier 2, tier 3, and that's what we really boost off. That's where India need to build. Vijay, just to put another number in perspective, India now has close to 5 crore mutual fund account, thanks to mutual fund mutual fund 10 साल से ऐड आ रही है. When you do that, startup ecosystem has only 1 lakh investor at the max. That's what I'm able to calculate back of the hand. So it's a very long journey, another 10-15 years that we will need. And the first step to do that is master classes and teaching people what we're doing right now. कौन कब invest करेगा? It's a long journey, and we are happy to walk the path.
Good, good. Thanks for sharing that part. Abhijit Mandal is asking that given the rapid growth of AI startup and continuous emergence of innovative product in this space, I'm curious to know how you evaluate this startup before making an investment decision, and what are the key factors or feature you prioritize when you consider an AI startup for investing. So though you talked about that 60-20-20 for the early age startup, but for any AI specific startup, anything different that you like to add?
So before I jump to AI, for any single startup, it's a 5 or 6 step process. First, there is a scoring based methodology where we give rating. which college that founder is from, is he a repeat entrepreneur or the first time entrepreneur? There are a lot of questions around that. Once somebody passes 70% marks, that it goes to second round, where there is a legal due diligence, there is a financial due diligence, there is a field visit if required, then there is a IC board, which is an investment committee, and then actual investment happen. And this is common to all startups all across.
Okay.
When you talk of AI or any startup, yes, we can say we don't know many industries. We don't know EV, we don't know motorcycle, we don't know drone, we don't know AI. And that's where we generally, in our investment committee, there are 3 or 4 standard members and there are 3 or 4 experts that we bring from that particular industry to do the titration. Yes,
Okay.
it's 0-1 गेम. आधे लोगों को अभी भी नहीं पता AI के पीछे if then else लिखा होता है. So yes, all that you need to do, and that's where that variable IC board, I call them, which is very industry specific, they enable
Okay.
us to do the creation. I remember one of the company, we even it cost IC for that matter, we brought on our platform almost 3 4 5 months back, but we got some red flag of the founder from his last company and we backed it off. Please understand, we earn only when investors earn, as simple as that. So it's a
Yeah.
responsibility of a platform to bring a very right set of startups in any industry with the best possible filtration. Uh,
Sure.
I would like to name now, may not have done a month back, who came to us for fundraise, and we in fact raised a very large sum, but we refunded that later in that time for some reason because we found some backup. So yes, very very stringent test, and that's what we say. Still leading to a 20% success rate only.
Okay.
80% still fails after that because at the end of the day, it's a startup. Their job is to do what nobody else has done, and that's why it is a high failure and high reward game. So yeah.
Great, great. Thanks, BA, for answering that question in detail. I have another question coming from Sanjeev Kumar. How can it be a part of investor in the startup, and what's the return generally, and what's the time period? Please share some insights.
So hi Sanjeev, I mentioned earlier that the general return period will never be less than 3 years. Generally take to 5 and 7 in general for any startup if you really want to earn. Unless you want to do 1 ka 1.5 and I want to exit, which is not the way you want to do in startup, please assume 3 to 5 years as a general benchmark. When you
Okay.
say return, my general goal is anything upward of 20 to 24% CAGR. 24% mathematically is 4x in 7 years. That's a benchmark I take when I bet on any startup for that matter. Because 11% mutual fund gives, 15% PMS gives. अगर उतना ही करना है तो वहीं पे कर लेंगे, which is much safer in that sense. So yes, the target is generally upward of 20-25%. Again, I would repeat, from whole portfolio. You cannot do that from each startup. When you invest in 20 companies, 15 may not give return. It's not that they have shut down, they may not give enough return. One will give you 50x, one will give you 20, one will give 10, one will give 2, something like that. So that overall will make, let's say, a 400 rupees of the 100 rupees that you invested. Assuming you have invested 5 rupees each in 20 company, I'm just talking in that sense. वो उन्हीं 4-5 कंपनी से मिल जाएगा आपको ओवरऑल 4x.
Good.
But just patient capital, 3 to 5 years, उससे पहले नहीं होगा. Upward of 20-25% CAGR is what you should be looking at. Anything below that is not worth startups. As simple.
As I can hear from this conversation, though, it's a environment is very adrenaline focused, like high intensity, lot many things happening. But as an investor, one has to have baby step, understand the things, and then diversify accordingly, right?
Yeah, end of the day, it's your hard-earned money. You don't need to burn out. So please invest in as a structured asset class. That's my only
Yeah.
message. अगर गैम्बल की तरह करेंगे तो फिर तो what will happen will happen.
Yeah. Though I have a couple of questions, let me just take the last question for today's Tech Talk show, and this is coming from Harshit Goyal, and who is asking, why do some profitable companies IPOs fail to deliver strong returns, while IPOs from loss-making companies often yield good returns?
Okay, why are you purchasing a share of Adani at almost 120p versus somebody at a different p? Because most of the time investments happen for the next 3 to 5 years, not what they are doing right now. Please understand that. It is not what I'm doing today is what I'm paid for. उसका तो आज share rate है ही मेरा. उसका तो आज
Yep.
पैसा मेरे को मिल ही रहा है, प्रॉफिट लॉस रेवेन्यू whatever is getting booked. Is the market bullish about my future potential? Sorry, again, disclaimer, I'm not here to put any names in with respect to your purchase power, but Adani is a classical case, I would say. It's running at a very high P on the anticipation that it's going to do great, and I have a very high regard for that company on what they are doing for India. So you always invest based on future projection, not based on the current results. Other thing I can name, for example, LIC, which is a government company, it got listed at a 90 P. All its competitors were running, and when I say competitor, I'm talking listed companies competitor. They are at 42 P. यानी जब LIC list हुआ, it was already 2x more than peers, though the government is still saying it is cheaper. So I don't know what is cheap or what is expensive in what definition, but it was a clear case, and then it dropped from 90p to 55p, which was supposed to happen. So I think there are a lot of matrices available right nowadays. It's internet, things are available, but most of the time high return or high strong results are for future projection rather than the current numbers.
Yeah, thanks VA for answering that question, and thanks Harshit for asking this question. With that, we have come close to our this week's Tech Talk show, and VA, thanks for sharing such beautiful insight about startup investing. For the benefit of audience, we have the LinkedIn profile of Mr. Vikas Aggarwal shown below, so you should follow him, understand the dynamics of startup investing, because knowledge is very critical. Knowledge is power in the current economy. So if you know more, you can understand the dynamics, you can do more, right? Mr. Vikas Aggarwal, any last message for the audience before we close the Tech Talk show for today?
Yeah, first of all, thanks Vijay for calling me up. Quite interesting session. People are engaged. My only last tip will be don't invest based on FOMO. I'll miss out, fear of missing out. Don't invest on that. हर आदमी कर रहा है, पड़ोसी भी कर रहा है, दोस्त भी कर रहा है. I repeat, it's a hard-earned money. And when I say don't invest in FOMO, it can be in any asset class. It can be equity, it can be gold, it can be whatever. Have a very informed discussion, connect with people. You want to connect with me offline, one-on-one, or anybody for that matter who you believe you can confide in. It's your hard-earned money, make it count.
Yeah,
That's
thanks.
all.
Thanks.
Thank you
It's your
so much
hard-earned
again.
money. Make it count.
Yeah.
Thanks. And we have commendation from different people. Aman Chadda saying thanks, Vikas, for an insightful session. So thanks, Vikas.
Thanks so
Thanks
much.
again. Yeah.
Thank you so much. Take care. Have a great evening together.
Yeah.
Bye-bye.
And thanks, audience, for always watching the Art Vectoscaler Tech Talk show every week. Keep watching, keep learning, and keep commenting with your thoughts. With that, let's do bye-bye for now and keep growing. Bye.
Bye. Take care.